Hey, what's going on, everyone? Welcome to the David Green Show live. We're going to be talking about mortgage interest rates, why they're coming down, and if that's going to continue happening, as well as why it's happening and what's going on behind the scenes. Before we do that, let me just take a minute to thank you all for being here. If you don't mind, please get your fingers ready to go, maybe your thumbs if you're watching on a phone. And type in the comments what you're thinking as we go through the videos that we've got for today. I've also got a little email up on the screen, as you can see, if you want to get put in touch with a loan officer to talk about refinancing your place or buying your next one. Or if you know a real estate agent who wants to sell more houses, we can help your clients. Go to intake@theonebrokerage.com. We'll get you put in touch with somebody. All right, let's get into today's videos.
Was Phil Green, Chairman and CEO of Cullen Frost Bankers. Thank you so much for joining us here. You know, I understand you're located in Texas, and sometimes Texas can sort of operate in different ways than different areas of the country. So can you explain to us, with real estate, of course, we know is very local, what is going on when it comes to mortgage lending for you all?
Well, thanks for having me, Courtney. It's great to be with you here today. You know, it's interesting to see what's happening with mortgage lending. As you mentioned, we've had really great activity going into the quarter. And one of the things that's happened is that rates have reached an inflection point, I think, where we're seeing people not only buying new homes, but almost half of our activity is from refi activity today. You're getting people that were in those ARMs before that are starting to come to maturity, and you're seeing that rate change. And if you see a 5 handle on rates, we've got a 575, for example, on the conventional mortgage, you're getting people take that rate. So we're starting to see that happen as rates have come down. People are taking advantage of that for refis and also purchases. We're also seeing that in the home equity lending as well.
What about sort of other areas of investment in lending that your bank deals with? What is the Texas consumer feeling right now when it comes to making bigger investments, maybe beyond the home?
You know, I think that there's a bifurcation with regard to the consumer today. I think the middle to low income segment of the consumer is really careful today, continue to be careful. They're spending on core, but they are being really careful on some of the discretionary items. When you look at the high income consumer, we're still seeing good activity from them, good activity in automobile purchases and those kinds of things. So it is a bifurcated market today.
So you talked before about when you see potentially a 5 handle on mortgage rates, like a 5 3/4, that maybe that changes things.
Right.
What are your expectations, or the bank's expectations, for where rates will be, say, over the course of the next year? I know obviously some central bankers are hoping for bigger cuts, while others still aren't sure because of the lack of data that we have right now with the government shutdown. What is your expectations for where rates will be, and then how are you operating your business as a result?
Well, you know, I wish I knew exactly, and I'd be making a lot of money right now. But I think that we're expecting for the Fed to continue to respond to what's going on in the economy as they see it. And you're right, we don't have quite as many data points. But I think one of the things that they responded to before, and I think one thing that businesses are hoping they respond to, is there's a little bit of developing softness in the labor market. And I think, you know, as I said before, asset prices are one thing, but when you're dealing with labor, you're dealing with.
My take on this, there's more than developing softness. It's massively soft, and it's being hidden with the way that the numbers are reported.
People, you're dealing with families. And so hopefully we'll see them respond to that and follow along as they see the economy slowing, lowering rates.
You know, there's been some consolidation in the regional bank space.
Right.
Where do you all sit with that?
Well, we're innocent bystanders.
Okay.
We are seeing it happen. It's not something that we're interested in. We are growing organically. In fact, we've increased our number of physical locations by 50% over the last 5 years in great Texas markets. So that's really how we've chosen to address expansion, is doing it organically. But, you know.
All right, they're just talking about like his particular banks there. But as you guys can see, rates are coming down, and in some cases you could be in the 5s. This is incredible. When you think about how not that long ago, a couple of years, we were talking about the 8s, some people in the 9s. Guys like me were getting stuff in the 12s. To be down in the 5s, if you're not looking into refinancing your house with us, Let's do that right now. First off, doesn't mean you need to do it. We need to look into it and see how much money you would save and if rates are going to stay low and there's no urgency, or if they could be going up, because there are some other forces at play, which I'll be covering in future videos. Frankly, Fannie Mae and Freddie Mac being separated from the federal government and not being a government sponsored enterprise anymore, which could lead to rates going up, likely would go to rates going up. In fact, in some cases, these bankers may have already cooked higher rates into what they're offering out of the fear that this could happen. Because if you're a lender and you're losing your insurance on these loans, your risk goes up and then your rate's going to go up with that. So this is very likely one of those windows where if you go, I'm going to wait for them to come down anymore. I mean, I hope they do. I think we need that. In some ways, the Fed may try to push them more. I've heard President Trump talking specifically about wanting to declare a housing emergency. And I mean, sometimes you say the guy's name and everyone gets mad. I was literally reading YouTube comments about how people stopped following my channel because I mentioned Trump's name. But you need to know what he's talking about, because what he is thinking is what is going to happen with the economy in the future. And if he's thinking about declaring a housing emergency, I think it's safe to say he's going to try to create some kind of incentives, be it tax or business or lowered rates, that's going to get housing moving again, which we desperately need from my perspective here. All right, let's get into the next video with a little bit more information about rates and why they are where they are.
CNBC debuting a new housing market survey going beyond the headline numbers for an on-the-ground look into residential real estate, which is perfect, right? It's all local. You need on the ground. Diane Olick joins me here on set with the third quarter findings. This is going to get interesting as we have compares, right?
Exactly.
But what do we know now?
Okay, so looking at the third quarter, and first just want to explain what we're trying to do here, which is kind of get beyond these really cold national statistics on housing and find out what real estate agents from across the country and in a cross section of neighborhoods are hearing from buyers and sellers. So here are the highlights from Q3. Now, when the average rate on the 30-year fixed mortgage was mostly on the decline, but it did move up a little bit mid-September. During that time, 49% of real estate agents we surveyed said it was a buyer's market, meaning buyers had the advantage because homes weren't selling and supply was sufficient. 30% saw it as balanced, and just around 21% saw sellers with the advantage. As for prices, 44% saw them on the decline, 35% stable, just 20% increasing. Again, all real estate is local, we know that, and market fundamentals are therefore different based on location. Still, the trend, definitely lower prices. But buyers are definitely getting more creative in how they're financing their purchases. We asked agents how, and their answers ranked the following. The most had clients using mortgage rate buydowns, and that could be from a home builder or an existing home seller. Next most popular was borrowing from family or friends. And finally, turning to adjustable rate loans. And in fact, this week in the mortgage applications data, we did see that share rise. Now, 89% of our agents reported having at least one seller who decided to cut their price last quarter. That really shows how kind of over-optimistic sellers still seem to be, despite all the uncertainty in the economy. And
that's a massive number. 89% of agents have had price cuts on their houses. This was unheard of a couple years ago. Everything was selling for more than asking price.
And this slowing market that we talk about all the time. Even more drastic, though, 40% of agents represented sellers who delisted their homes due to these rough market conditions. Now, this is just a few of the...
So that tells us something, too. If you're delisting your home, you don't have to sell. These are people that put their houses on the market, which means they didn't like it. So their tenants weren't cooperating, or they thought the price might come down more, so they wanted to sell before that happened. They didn't get any bites. They didn't get buyers, and so they go, okay, I'll just keep it. That's a very different situation than someone that has to sell their house and then has to lower the price.
You know, pieces of the survey. You can read all about it, of course, on CNBC.com.
Yeah, I want to dig more into that. I mean, we're talking always about forward-looking information. Crystal ball. What are agents thinking about for the next quarter, fourth quarter of this year?
Okay, so we asked them that question, and 49%, so almost half of them said they expect the market to actually improve slightly, and I'm sure that's based on these lower mortgage rates. 35% said it'll stay the same, and it was really just 17% who said that they thought home sales would start to decline and the market would actually get worse. So that's a good thing.
Good thing. The adjustable rate mortgage interest or interest from buyers is interesting to me as well. Thank you, Diana. This is going to be great stuff to have as we go forward and can get those compares.
So the market's not doing great, as we can see. Most of us are probably feeling that, even though it's not being talked about a whole lot. Let me know in the comments what you guys are seeing with the market, and if you're seeing that these lower rates are kind of bumping things up. It should be going gangbusters right now. Weren't we all told that if rates drop, that housing prices are going to explode, and that's why we can't put interest rates down? Didn't everybody get told this? Even though when rates went up, we didn't see prices collapse. We were still told if they lower rates, housing prices are going to explode. Well, guess what? Rates are coming down. We're not seeing housing prices explode at all. As Sharp Home Solutions here says, the market has been correcting here since 2022. And he says we have many years worth of inventory in subsegments. Yeah, lower rates are not causing housing prices to explode. In fact, 89% of houses cut their listing price. So there's obviously more factors that go into home prices than interest rates, even though we keep getting told over and over and over by the media that rates are the only lever that the government has to pull, and they can't pull on them anymore because if they drop rates anymore, it's going to cause inflation. And so we're just going to let housing die. But it's okay because we don't want prices to explode.
Good morning. And the Federal Reserve is expected to cut interest rates at its meetings today. Now, keep in mind, mortgage rates aren't directly set by the Fed, but they can be influenced by them. And we've seen mortgage rates drop ahead of the Fed's decision. So let's take a look at where things stand right now. So if you've been out of the loop, let's get you caught up. If you've been tracking this closely, this is where the average 30-year fix is.
All right, a couple things we could take from this. Rate hasn't dropped below 6% in 3 years. These are very low rates compared to what we've been seeing. Should be getting a lot more attention than it is right now. Lowest level in a year. Here's something else. 15-year fix is 5.72. If you've got a lower loan balance, like not $400,000, $500,000, $600,000, less than that, it might be worth looking into not only refinancing into today's lower rates, but getting an even lower rate and getting into a 15-year and paying that mortgage off faster, especially if you're not looking to scale. Go to davidgreen24.com, use the chat feature. You can get a hold of me directly, and I'll share with you a little bit of information about what scenarios you should do this in. And there's also information about this in my book, Better Than Cash Flow, the 10 Ways You Make Money in Real Estate. There's a whole chapter committed to building wealth through loan pay down and different options, like 15-year, 20, 30 amortization periods.
Is right now a little over 6%. That's according to Mortgage News Daily. Rates haven't dropped below 6% in 3 years, but again, we're getting closer. As for the 15-year fix, it is about 5 3/4 or so percent. So with mortgage rates slowly inching down, is interest spiking right now with people buying and refinancing? We talked to Alex Jones. She's a loan officer with Movement Mortgage. She says she's not seeing as much of a pickup as she expected. Jones tells us some potential buyers want to wait until early next year. Now, that's a common approach, right, as the holidays are not too far away. But Jones likes to say homes can also have a Black Friday sale too, and sometimes the end of the year, according to her, is a good time to buy. So if you've been on the sidelines wanting to make that purchase, this is why she thinks you might want to actively start looking.
Beating people to the punch is an excellent move if you are in the market to buy right now. We're still seeing a lot of seller concessions. So we're seeing sellers help contribute to your rate, which right now, that's easily getting people into the 5% rates, which a lot of people, if you ask them, would you buy a house?
All right. When they say seller contributing to your rate, what they're saying is seller giving you money towards your closing costs, which are then redirected to your lender where you buy the rate down. This is a strategy that I've used on tons of deals, and I've helped a lot of the people that are my clients do the same thing, where we can get you a lower rate, but instead of you having to kick the money in, we get the seller to do it by negotiating. Instead of the price come down, we negotiate you back a credit, which for whatever reason, sellers like to sell their house for more, but give the money as a credit instead, and you can get a lower rate.
House, if your rate was in the 5s, they'd say yes.
So whether you plan to buy sometime at the end of the year or sometime next year, how can you start preparing? Let me tell you, you got to start now, right? Coming up at 7, we're going to help you get in the best shape possible with your finances.
Right. You want to start preparing now? Send me a message. I'll tell you what I think. All right. We got one more video here that is kind of making the rounds that one of you sent me. I haven't watched it yet. I want to dig into this and see what you guys think.
Are collapsing right in front of our eyes right this very second. The banks are collapsing. From October 15th to today, they have taken $106 billion from the repo market. That is when the Fed injects liquidity into the banks with pretty much a IOU. It's not good. It has not been used since 2020. It is not something that is meant to be a cure. It is a band-aid to a banking problem. And now with that, it is a demolition of the system. Again, this whole government shutdown, all the jobs being cut with Amazon, UPS, other places like Target. This is the reset. Do you guys remember in 2022, the Great Reset? Well, this is the Great Reset. Build Back Better. You remember that one from the Biden administration? Well, it's just got a red paint to it now. It's just that the other team is taking care of this Building Back Better, Great Reset, but you have to have the old system, be destroyed and demolished first before you can bring up the new system. That is the idea of the order from chaos, the phoenix rising from the ashes. And it's fascinating to be living through this entire situation. It's like watching a slow motion train crash or car wreck, just watching it unfold right in front of your eyes, and you have zero power, zero control over it. All you can do is watch and observe and do what you can with trying to preserve whatever financial stability you do have, whether that's precious metals. I know some people go to crypto. I'm sketched out by crypto because that is their objective, a digital currency on the blockchain, everything tracked and traced, everything surveilled through AI governance. That is the future that they are.
All right, he lost me at they. We got into conspiracy there. Let me know if you guys know what's up with this Fed repo talk. I'll look into a little bit more and I'll go make a video later if I think it's something worth looking into. Somebody sent me that was like, you got to talk about this right now. We just didn't want to get into that whole thing. But what I do think you should know, rates are down. They're down significantly. Home prices are not exploding. This is a great refi opportunity. If you're looking into refining your house, connect with us now. If you've already got a person that you really trust, connect with them, but you need to be refinancing. And as we can see, it's not making the market go gangbusters. So why is it not? Why do we not have a whole country of people that are exploding looking to buy a house right now? Well, there's a couple different things it could be. I'll just share my thoughts. One, I don't think that people feel really strong about their job situation. People don't want to go invest in a house that comes with a mortgage if they think they may get laid off or they're not getting raises or everything else is more expensive, which would lead me to number two. Inflation has made things so expensive that people don't have extra money. They don't feel wealthy, so they don't want to invest into more real estate. Number three reasons why I think that the market is not exploding. People don't have as much money laying around as they did before. When they were making a ton of money and they were saving a ton of money and the cost of living was really low, it was natural to be like, how do I grow my wealth? I have some wealth. How do I get more? Real estate was their best option. That's not what we're seeing right now. Even as rates are coming down, you don't see a whole bunch of people wanting houses because housing in a lot of areas and a lot of situations is dead weight. It's a mortgage that you can't unload. It's expenses, it's materials, it's labor, it's maintenance, it's headaches, and people don't want it. We destroyed so much of the economy when we pushed the rates up that now people don't want to go buy homes. And it's not just real estate investors, it's regular people that are like, yeah, I'm good. I'm not going to go buy a house. I think I'm fine to just stay here living with mom and dad. There's no reason to not do that. I don't have job security. I definitely don't have career progression or growth. I'm overall very bearish on what's going on with the economy, and I don't want to go extend myself to buy even more houses. So what do we do with this? Well, if you're able to get a good deal right now in a really good area, you're probably going to find opportunity that will look really smart in the coming years. If you're not, don't beat yourself up. You got to get your financial picture squared away before you go try to build your wealth. There's no reason to try to go add a whole bunch of houses to your portfolio if you're not in a solid financial picture right now. My guess is most people in the country don't feel it's solid. Their reserves are eaten up. They're not making more money. They don't have extra income coming in. They don't feel good about the job market, and housing is very expensive. That's 5 reasons right there why interest rates are not making house prices explode. I'm just bringing this up because so many people were told if we drop rates, prices were going to explode and the market was going to take off like it did before. And they were told that when rates went up, housing prices would collapse. Guess what? Turns out it's more than just interest rates that affect this whole thing. And if you were told different, you were lied to. That's okay. You're not getting lied to now. Hopefully you guys spend a little bit of time thinking about this. Housing tracks with the economy. I'm going to say it again. Housing tracks with the economy. When the economy is healthy, housing is healthy. When the economy is anemic and weak, housing hurts people. So hopefully you guys are managing your finances well. You've got money in reserves. You didn't quit that W-2 job like I told you. You kept working it and you stayed true. You will have opportunity. If you're that person that made that mistake, might not be a bad idea to eat a little bit of humble pie, swallow your pride, go back out there, get a job, take some of that pressure off of yourself and wait for the next run. Appreciate you guys being here today. Let me know in the comments what you thought about today's show, and also tell me what you'd like to see in future shows. Like the video, subscribe to the channel, and share it with more people. I'll see you guys later.